Okay. Hi, everybody. How are you guys? Hope you guys are having a wonderful afternoon or evening wherever you are. Um, Today, we're going to be running a Surge Decoded live stream. I see that you guys are trickling in. Really nice to see all of you coming in. I know some of you will be joining us from YouTube as well, and not just via Zoom. So that's like super exciting to see. So thank you so much for joining today. Uh, today we'll be Today we'll be chatting with Rajan Anandan, Managing Director of Sequoia for Surge. So Rajan, how are you today?
Very well, Alicia. Thank you.
Yeah, so Rajan, as you know, has a wealth of experience both as an angel investor as well as leading Google's operations in India as well as Southeast Asia. He knows a lot when it comes to startups. So today, Rajan, we're going to be chatting a lot with them. But as usual, we would like to get a pulse check. We'll love to get a pulse check of you guys. We'd love to see where you guys are coming from. We'd love to understand what sectors you're looking at. So Rajan, I think we're gonna come up with a survey. So Gina, if you can help us. All right. So please do scan this QR code and let us know. Let us know. Okay, seeing a bunch of you coming in. Great. So this is a
Ali, they can either scan or go to that website, right?
correct. There's also the link in the chat as
Yeah, on
well.
the chat box, there's a website. You can either go there or you can scan with your phone.
Yep. All right. Great. So shall we start? Can you tell us a bit about which city you're coming from? We'd love to know where you guys are based in. That will help us also to tailor the session to you. Lots of India, isn't it, today? Great. Oh, Manila. Hi. Hi,
Manila, Delhi,
Delhi. Kozhikode.
Pune, Toronto. Wow.
Someone.
Did you see Toronto?
Yeah. Look at that.
Kolkata, Hyderabad. Interesting. Indore. Wow.
I also see somebody put in Jakarta on the chat.
Person who put in Jakarta, please use the Menti
Menti.com.
survey. We'd love to hear from you.
We'd love to see it there.
Agra. Okay, cool. All right, let's keep going, Ali.
Right.
There you go.
Which sector is your company operating in? So type it in. Is it SaaS? Is it edtech? Oh, robotics, gaming, last mile delivery. Please put in the Menti, guys. We would love to see it in the Mentimeter. It's just like, it's so easy for us to see. Anyone? EdTech, advertising as well.
Somebody says the sector is Goa. Goa is a state. Goa is not a sector.
Sure tech.
Blockchain, wind energy, ad tech, edtech,
Healthcare.
rental. Cool. It doesn't repeat itself, right? Okay, awesome.
No. Okay, which state is your startup currently in? Oh, lots of people have launched this time. Cool, look at that. Lots of prototype as well, or beta. Okay, great. I think the next question is about whether you've raised funding yet. Okay, oh, some from institutional investors, some from angels and families and friends. Good to see. Surge is for everyone, whether you've raised financing or not. And lastly, have you already applied to Surge? And we'd love to know if you guys are planning to apply to Surge 5. And based on the questions, it seems like a bunch of you are planning to do so or have already done so. All right, perfect. Without further ado, Rajan, shall we start the session then and ask you a bunch
Let's
of
get
questions?
started, Ali. Yeah, let's start.
All right. So we have a question from Prasad from the company Derivify. He wants to know how many levels of filtrations do the search applications go through? Once the application, let's say, is shortlisted, what are the next couple of things that founders should be prepared for to make sure that they are prepared to make it for the next cohort? What is the process like?
Yeah, I think it's a great question. Well, first of all, thank you, Ali, and to the Surge team for hosting this. And thank you to all the founders who are dialing in. I hope that all of you and your families and your teams are safe. Fortunately, the vaccine seems to have arrived in the world. And hopefully over the next, 2, 6, 8, 9 months, regardless of where you are, I'm hoping you'll be able to get the vaccine and all of us will be able to go back to normalcy. Thank you for coming. We're super excited to have all of you. Look, in terms of the process, so you apply to Surge, and then we have a team, a Surge team, a Surge investment team that actually goes through every single application. We look at it carefully. And then what we decide is, whether we want to take it to the next step, right? And the next step is usually a meeting that you will have with one of our Surge team members. And by the way, so we get many thousands of applications. We go through all of them, and then there's a whole number of them where if you think that, look, this is not a company that, and I can talk about what do we look for. Hopefully, all of you know now what we look for because we've had many of these Surge Decoded sessions. But so we may actually decide that no, this is not a good fit for Surge, and then we let you know. But if you think that it could be a fit for Surge, then the next step is a meeting that you will have with one of our team members. Right, so one of our team members, depending on whether you're in India or whether you're in Southeast Asia or Jakarta or Vietnam or Singapore, depending on where you are, one of our team members from that geo, either SEA or India, will set up a call with you. They'll have most likely a 30 to 45-minute Zoom call with you, Zoom session with you, and where they're number one, they're trying to get to know you, sort of talk to you in person, and then second, they will have you walk through your deck. So. You may or may not have attached a deck in your Surge application. It's always a good idea to do. But if you haven't, then have your deck ready, right? And by the way, if you don't know how to write the deck, we've had many sessions on how to write your pitch deck. And maybe Ali, we can put on the chat stream some of the material that founders can go and look at. For what we look for in your application and what a great pitch deck looks like. Please do make sure you kind of take a look at that because you can then actually have your pitch deck ready. So then you will walk through your pitch. And then after that, if that team member decides that it's a company that is certainly worth going much deeper with, then we will have an internal discussion. That team member comes back. We have an internal discussion. We a couple of times a week as an investment team, we go through and talk about all the interesting companies that we've met. And then the next session usually is with either 3 or 4 team members, or it could actually go straight to what is our investment committee, right? It could be sort of, venture firms have something called an IC, an investment committee, and that will be a few of us. So it's either one more step, or you might meet, your next meeting might be with, let's say 2 or 3 team members, and then you'll go to your final meeting. So depending on the company, you might actually go through that whole thing within, let's say, 3 to 4 weeks, right, from your first meeting to the final decision, or maybe it'll take slightly longer. Occasionally, we'll do it much faster. So it sort of depends on, when you apply, how busy we are, and also what you think of the idea, and so on and so forth. But usually that's, it's a pretty quick process. Once you have your first meeting, within a few weeks, you should know whether you will be whether we'll be fortunate enough to have you as part of Surge or not. So that's sort of what you can expect of what it will, how it will go, right? So either you will hear from us saying, this is not the right time. We don't think it's the right time for Surge to partner with you. or we will actually say, hey, look, we'd like a meeting. And if we do have a meeting, usually it'll be with one or two people, and then we will have a set of subsequent meetings.
Perfect. I think that really helps to answer your question. This one is from Richard from Doifu. How Surge will help us ahead with consumer products targeting on a global scale. I think we do have a couple of examples, right, Rajan?
Yeah, we do. So we have a company called Skillmatics. If you're from India, you may have heard of it. If you haven't, you should definitely take a look at it. Skillmatics was in our first cohort of Surge. It's a Bombay-based. They're based in India. It's a Bombay-based company that makes educational toys for children. They actually a company that is from India, but actually is now got almost all their revenues from the US. So they were in their first Surge cohort, right? So we kind of helped them think through. I mean, at the point they had a product that worked really well. We helped them think through sort of which markets they should focus on. I mean, obviously that sort of ended up in the US, and then we helped them sort of think through how to penetrate the US. Today they primarily sell on Amazon in the US, but they just went offline. We helped them sort of think through what kind of team should they want to build. We help them think through sort of how they should drive execution, OKRs, MIS systems, things like that, right? So it's a whole set of things. So the way you should think about it is, the way, whether it's a consumer products company or a SaaS company, or a edtech company or a digital health company or an agri-tech company, when you come into Surge, we work with you to sort of say, what are the 2 or 3 things that you want to get out of Surge, right? So for companies, say, that have just launched or pre-launched, if you're a pre-launch company, you want to launch and get to product market fit. That should be the only objective, right? If you've launched, you have something in market, then the first step again is get to product market fit. But once you get to product market, you may have early signs of product market fit. Then how do you get to product market fit? But then there are companies that have launched, that have some traction, that have reasonably good product market fit. For them, the focus might be, hey, look, we want to build out our team, so we need some help in hiring our team. Could be engineers, could be it could be salespeople, it could be the growth team or the marketing team, and for others it could just be growth, right? So to give you a sense, we have we have quite a number of SaaS companies in this cohort. Some are very early; they've just launched, so they've got to find product market fit. Some have actually they've launched and they've got traction and they've got revenue. So they've said, look, we want to scale 5x over the next 5 or 6 months. And then we sort of sit down and work with them to say, how do we do that, right? It's about, do we have a scalable GTM in place? How do we put that in place? How do we make sure we go hire salespeople? How do we make sure we hire a sales ops person? So it really is depending on the company. We would focus on different aspects. So if you're a consumer products company, and let's say you've already launched and you've got a bit of traction, first question we'd ask is, do you have product market fit? All right, and if you have product market fit, then are you focusing on the right market, right? Like, for instance, if you're global, are you focusing on the right set of countries? Within those countries, what are the channels that you should think about, right? And then we'll help you think through and then pick the right channels, right? And then if you need to actually get access to a channel, we can help you with that as well. So it really is very dependent on who the company is. Now, going back, as all of you know, Surge is capital. So we will partner with you and invest $1 to $2 million of capital upfront. And then we have a 15-week program. It used to be online. It used to be offline. Now it's entirely online, where we go 1 day a week. We go very deep on all the important foundational aspects of building an enduring company, right? So you just talked about product market fit. We have 2 full days that are dedicated to finding product market fit, building out product teams. We start by, what's the mission of the company? We help you develop that. So it's everything from, sort of product to engineering, how do you hire engineers, to how do you build a growth strategy. So think about that as sort of a 15-week program where we go through all the important aspects of building an enduring company. And then we help you, each company, on 2 or 3 things that they want to really drive on, right? And there we bring the best of Surge, the best of Sequoia. We have a number of advisors who we have worked with each company to help you kind of move the needle on that.
Perfect. I think like another question that we have from Luke is around like board membership. One, does Surge take board seats? How would you, if yes, how would you describe the Surge style of like being on a board seat? And what advice would you give founders on how to manage boardrooms?
Yeah, no, I think those are 2 different questions. So first of all, Surge does not take a board seat, right? So we will invest $1 to $2 million. We don't take a board seat. Our term sheets, we believe, and our shareholder agreements are the simplest you're going to find. in the region, right, for that amount of capital, right? So because we are investing $1 to $2 million, and in 80% of the cases, by the way, we co-invest with other companies. So actually, a company would end up raising more than $1 or $2 million. Most of them end up raising more than that because they have Surge and they also have other co-investors. By the way, you don't need other co-investors, but 80% of the companies end up having other co-investors. But what you'll see in our term sheets, they're the simplest term sheets you're going to find for any investor who's going to invest $1 to $2 million. Same thing with our shareholder agreements. So we don't take both seats. So that's the thing, because we want to make sure that you should have board members once you've raised significant amounts of capital, not at the very early stages, because in the very early stages you should really obsess about building awesome products, about launching, about finding product market fit, making sure your first set of people are team members are absolutely amazing talent. And then, once you raise your follow-on round of capital, that's when you should actually establish a board, right? I think in terms of board, by the way, we have a whole day where we focus on building and managing boards with our Surge founders. So it's a very important topic, because what happens is after you get out of Surge and once you raise your next round of financing, right, a Series A could be 5 million, 7 million, 10 million. Some of our companies even raise more than that. That is when you will have a board, because your next round of investors will actually want you to have a board, and we actually think it's absolutely critical that you have a board. We think a couple of things, right? One, I think keep it small, right? Sometimes we get very worried when we see early stage companies. They have a board with 8 members. 8-member board is usually a pre-IPO company, just so that you know, right? 8-member board is not for a seed stage company. So keep it small. Make sure that it's 1 or 2 co-founders. If you're 2 co-founders, you can have 2. You have 1 investor, and maybe you want to have 1 advisor who's very helpful, or it could actually just be the 2 co-founders and the 1 investor. Let's say your Series A lead investor, whoever that is, it could be 3 or 4 people. Keep it very, very small, right? The way you should think about it is every round. So at seed stage, you should not have a board. At Series A, you will have a board, which is after Surge. Keep it very, very small. Maybe it's 3, maybe 4, including the founders. And then with every round of financing, maybe you want to add 1, so that once you've had 4 or 5 rounds of financing, you get up to about 8 or 9 board members. But be careful about having too many board members, right? You'll have lots of people who invest $100,000 or $200,000 at angel stage. They'll say they want to be a board member, and you should say no, right? So keep it small. Secondly, you should focus on really focusing your board meetings, especially as an early stage company, as a Series A company, on the most important issues for the company, right? So try to send pre-reading to your board, that has the financials, that has the progress, the highlights, the lowlights. How are you doing in your OKRs, objectives and key results? So there's a lot of always send out the pre-reading 2 days ahead, and then try to focus the board meetings on real issues, right, where you'd like to get the board's input. So that's the number 2 thing, right, is keep them focused on strategic issues or real operational issues that you're facing, so that you can get advice on what to do. Third thing is keep it short. Don't have 4 or 5 hour board meetings. A Series A company, you should keep them to 2 hours. You can have strategy sessions, right, with the board member, where you want to go deep on, let's say you want to go deep on product, or you want to go deep on go to market. But the board meeting itself, try to keep it short. Keep it to 90 minutes, 1 hour, maybe 2 hours, 90 minutes to 2 hours. Because the longer time you have, what you'll find is you'll end up spending the time. If you schedule a 4-hour board meeting, guess what? It's going to go for 4 hours, because you're going to have enough material to go for 4 hours. Your board members would have set aside 4 hours to actually spend with you, and you will end up spending 4 hours where you don't really need to spend 4 hours. So those are just some thoughts. But long story is, we don't take a board seat, and if you're a seed stage company, you shouldn't have a board.
Great. I think the next question is about there's a couple incoming, both from Zoom as well as the in the registration form. We have about 300 questions. So I'm trying to balance between the two. I think one of the questions that we have right now on the Zoom webinar is, what do you guys think of a Malaysia-based startup with a focus to expand to Southeast Asia region? Is that something that's viable for Surge?
We do not have a startup from Malaysia yet in Surge. We would love to have a startup from Malaysia, right? In fact, if you look at Surge today, we have obviously about half our startups from India, half our startups from Southeast Asia, right? We are now, by the way, we just started our 4th cohort, which is 17 companies about 2 weeks ago, 3 weeks ago. So we like to have sort of a good 50-50 mix, but what we see is some cohorts, we have more companies from Southeast Asia, some cohorts, we have more companies from India. So far, we have obviously lots of companies from India. We have quite a number of companies from Indonesia. We now have several companies from Vietnam. We have obviously a lot of companies from Singapore. We have 1 company from Bangladesh. But we don't have any search companies from the Philippines yet. We don't have any search companies from Malaysia. We don't have any search companies from Thailand. And we would love to see companies from those sets of countries, right? So Philippines, Thailand, Malaysia, in Southeast Asia. We also, and if you look at South Asia, we have a company from Bangladesh. We don't have a company from Pakistan. We don't have any companies from Sri Lanka. So you know, we still have a lot of ground to cover in terms of countries. But keep in mind, if you're coming from a country like Malaysia, as the founder, just the question that Ali, you just mentioned, one of the things we look for is large addressable markets. Right. So, by the way, you know, you could be in a space where you could build $1 billion valuation company only in Malaysia, but more likely than not, you may actually have to build a business that goes beyond Malaysia. But again, it really depends, right? I think the question that you should be asking, especially if you're going to apply to Surge, is, you know, can this be $1 billion, a company that will be valued at $1 billion? Not, by the way, next 2-3 years, but 7, 8, 9, 10 years out. You know, if you look at sort of an 8 to 10 year planning horizon, can you see this company becoming large enough where it's going to be at least $1 billion company, but ideally a multi-billion dollar company? And a lot of that really has to do with how big are the addressable markets. Anyway, long answer to your question. If you're from Malaysia, we want to hear from you.
Perfect. Great. I think this one is a little bit more sector related. Somebody in the registration is asking, how can a game dev studio apply for this program to raise funds for a non-hyper casual game? Is that something that Surge would potentially look into?
Yeah, I mean, it's a great question. Look, we would love to see more gaming companies, right? In fact, you know, earlier today we spent an hour going through and you know, overview with our internal discussion with our own Surge and Sequoia teams on how's the gaming landscape evolving, what are the different kind of gaming plays. So if you're a game studio, look, if you're building very, very special games, if you're a very experienced set of game developers, game designers, and you have, you know, like founder market fit, hopefully, you know, all of you, since I'm hoping some of you have been coming to these sessions before, you know, we'd love to hear from you right now. But look, if you just started building your first set of games and there's no real experience of, because, you know, game development is sort of a, you know, is a skill-based thing, right? So if you're very experienced, if you've got a track record, or you've got some hits under your belt, or you can show that you've got some early traction that's very interesting, we would love to hear from you.
Great. I think here's another one. Somebody's like saying that they have a strong desire to be a part of Surge, and the fear of rejection is pulling us back from applying at this point. They've launched a hyper-local customer engagement platform for retailers and mom and pop shops. Should we wait until we see high traction before we approach? And I think there's a lot of questions as well in the registration form. It's similarly saying that, you know, should we wait for better traction before we apply?
No, so I think, well, firstly, I think this is more generic thought to all founders is never worry, always ask, always try. Right now, if you actually come to our Surge Decoded sessions and you watch a lot of the videos, in fact, I was just telling Ali and the rest of the team that we've done several of these. So we have enough web content today where you can literally go and figure out what exactly does the Surge team look for. Do you have the right stage? And quite frankly, you know, we have 6 out of our 17 companies in our current cohort. The 4th cohort, when we partnered with them, they were pre-launch companies, right? So essentially, we were betting on a team and a market that we think was large enough to build a very big business. So you don't even have to have launched. So short answer is you should absolutely apply. You should never be afraid. Look, you can apply to Surge as many times as you want. Okay. In fact, I think this cohort, I'm trying to think. Oh, for Surge 5, oh no, maybe it was Surge 4. We had a company that actually applied to Surge 1. We didn't think they were ready. They applied to Surge 2. We didn't think they were ready. They applied to Surge. No, they didn't apply to Surge 3, but they applied to Surge 4. And now they're in Surge 4. So yeah, I mean, you know, look, it's never too early to apply to Surge. And the other thing I would say is, you know, if Surge is a program that you'd really like to be a part of, you should keep trying. I mean, and look, at the end of the day, that's what makes great entrepreneurs, right? Great entrepreneurs never, ever, ever, ever give up. So please don't give up, right? And also don't worry about it. Look, just because you applied once doesn't mean the second time you apply. We look at every single application very carefully, regardless of how many times you've applied before.
Great. I think here's another question. How do I get my first customer? I'm making a product. I want to get tested by a customer. We're we're worried as a startup, we can reach out to smaller customers, but we don't think the product will be suitable for them. We're building for an enterprise client.
Sorry, say that again, Ali. I lost you for a second.
Sorry. How do I get my first customer? I'm making a product and wanted to be tested by customers. The problem is, I think she's targeting bigger customers that are maybe more in the mid-market enterprise range.
Yeah, I think it's a great question. Look, first of all, if you're building enterprise software, your ability to get a customer to use your product and pay for it is the most important thing, because until you do that, you don't actually even know whether you built a product that's useful, let alone like, you know, getting to the customer, right? So we actually try to urge, especially our startups, enterprise startups that are building for, let's say, mid-size or large enterprises, to co-develop their product with customers, because otherwise you don't know, right? Are you building the right product? Are they going to use it? Are they going to pay for it? But if you co-develop a product, it gets to be much easier. Second thing is, in fact, we have a whole session on sales and go-to-market. And what we talk about for seed stage startup, especially SaaS startups, more relevant for sort of B2B startups, is what we call founder-led sales, right? At the end of the day, unfortunately, good news or bad news, it's going to be you. It's called founder-led sales, right? So up till you get to about $1 million of revenue, you are going to be the chief sales officer in the company. So find a way to get to them. Use LinkedIn, use your networks, find forums where you can, meet them, build your social profile, start writing incredible content. So there's no one answer other than what I can tell you is really, and if you haven't talked to a set of enterprise customers or potential customers before building your product, you should be worried, because I don't know whether you're building something that is very useful, right? So that's very important, right? Because at the end of the day, especially in a B2B business, right, you're trying to meet a specific need of a company. Either it's a functional need or it's a very vertical industry need for that company. And if you haven't talked to customers before building your product, you don't know whether it's going to be useful, right? And now you built the product, you can't get to the customer. So I have this question of, have you really done the market work, what we call the market work, the customer research, to figure out whether this is a product that you should build or not. But in terms of finding a customer, look, that's what building a startup is, right? It's all about hustle. It's all about trying to get to the last customer. But what you'll be interested is, look, figure out the 10 companies who you think are most ideal for this product that you're building, right? Figure out the decision maker. Those things can be figured out through LinkedIn. Now you have to really write an email that captures a LinkedIn message that captures the absolute essence of what you're building. Why is it that what you're building is going to be absolutely incredible for that company, for that decision maker? I would send LinkedIn emails. I would send 50 LinkedIn emails. If you don't get a single response, you may not be building something that's valuable, right? Follow people on Twitter, follow people on LinkedIn. Find different ways where you can get to these decision makers.
Thank you. All right, Rajan. I think this one is another really interesting question. How do we at Surge do valuation of startups that are still at idea stage or not making revenue at all? How do we come to the valuation of that?
Yeah, look, what I can tell you is there is no science to a valuation at a very early stage company, right? So the later stage you go, once you go public, there are different sort of public market valuation models. At late stage investing, Series C, D, E, there are different valuation stage models. At the seed stage where we invest, there's really no science, right? So at the end of the day, look, it's a combination of the experience of the team, how big is the market. So we invest $1 to $2 million, and we will take, between 10 and maybe a little more than 20%. We have a range, right? So we won't take 2-3% for 1 million. At the same time, for $1 million, we're not going to take 40% of the company, right? So that's really what it is. So it's a combination of, what kind of market are you in? How good is the team? How good is the space? If there are other investors who are interested, it's sort of like, because we do co-invest as Surge, right? We won't follow somebody else, but we can co-invest with others. So maybe this company has sort of agreed to some sort of, rough valuation with it. But it's not a science. And what I can tell you as seed stage founders is, don't focus on valuation. Focus on the quality of the investor who's going to partner with you, right? I find that, by the way, before I joined Sequoia, I was a very active angel investor in our region, for a very long time, for 2 decades. And I was always, kind of amused by how much, founders obsessed about valuation at the very early stages, right? Because at the end of the day, the question is not whether did you dilute 10% of the company or 15% of the company. The question is, did you partner with the right investor who can really help you accelerate your business, who can surge your business, and that is what you should focus on, right? And the best, by the way, the best seed stage investors are the same way, right? They don't obsess about kind of valuation and wanting to get to 25 or 30% ownership. I mean, look at Surge, we don't have 25% ownership. We don't certainly don't have 30% ownership in any company, right? We have the early 20s ownership in a few, but it's usually 10 to 20 some percent sort of ownership for $1 to $2 million. So I'm
Perfect.
sorry I can't help you. There is no equation. But what I can tell you is you shouldn't try to find an equation either. And early stage companies, right? You'll find investors who are very excited about your business. And if you find the right investors, what I can tell you is they will be very fair. Like, we believe, and you should ask our Surge founders, we believe that at Surge, we are very, very fair, right? We're very focused on, what is right for the founders, what is right for the company. And that's really what in fact, that's sort of our whole thesis of, that's why we're here, right? Is so we can make founders, help them build enduring companies.
Great. All right. So another question is coming from Charlotte, who is building an edutech company. She wants to know what is the minimum traction or sort of traction for a pre-launch edutech company.
Yeah, I mean, look, if you're a pre-launch company, you have no traction, right? I mean, that's the definition of pre-launch. You haven't launched yet. You don't have any traction. So what are we looking for? Let's take EdTech, okay? And Charlotte, which country is Charlotte from, Ali?
Charlotte is based in Singapore.
Oh, in Singapore. Okay. So I think Charlotte, what we'd look for is number one is understanding more about the founders, right? What is it about, Charlotte, whether it's you and I don't know whether you have a co-founder or not, it doesn't matter. By the way, we've invested in and partnered with many single founder companies. Delhi and Tiger Hall is based in Singapore, is single founder. But you may have co-founder, one or two co-founders. You may be just single founder. You may have three co-founders in the company. But we look at the founder or the founding team and sort of ask ourselves this question of what is this team's right to win in this market? Do they have experience? Do they have a deep, one is passion, right? Are you passionate about the space? Do you have a personal problem that you're trying to face? Do you have a training in, the pedagogy, right? Have you built an edtech company before? Have you been a part of an edtech company before, right? So we're trying to understand this concept called founder market fit. And I'd encourage all of you to do a lot of research on that. Again, at Surge, we've got lots of videos, Surge Decoded sessions that Ali has run before, where we've talked about this concept of founder market fit. Please understand that and say, can you credibly make a case that you've got great founder market fit? Okay, that's point number one. The second thing we look for is really the market and how big is the market. So clearly, edtech is massive, right? India already has Byju's, which is an edtech unicorn, actually now a decacorn valued at over $10 billion. Sequoia was fortunate to be early investors in Byju's. We got another company called Unacademy, which became a unicorn. And we'll probably have another dozen unicorns in India over the next 5 years in edtech only, right? So, you can build large companies in edtech. But then the second question, so there's no question about that. But the question we would ask is, okay, look, what is the specific market you're going after? Are you going after a specific country? Are you going after K through 12? Are you going after test prep? Are you going after vocational training? Are you going after language training, right? What is the specific market? A combination of country and the type of edtech segment. And we'll sort of ask ourselves the question, is this a market that's large enough where you can build a large company, right? And if the answer to that is yes, then look, if you've got great founder market fit and we think the market is large enough, then we'll definitely meet with you and we'll spend a lot of time with you to say, okay, do we think that this is a team that can execute and get to the page? So that's sort of how we look at pre-launch companies, right? It's really the founder market fit, spending a lot of time trying to understand founder market fit. And second, we look at the market itself to say, is there a white space in this market? Do we think a large company can be built? If there are already 2 or 3 competitors, is the approach that you're trying to take to this market, is it very different to the existing companies? So one of the things you'll see if we talk to, when our team talks to you is, we're trying to assess what are the unique insights that you have into the business that you're trying to build. What are those unique insights, right? So please keep thinking about that. What is it that you've learned about the problem that you're trying to solve, the customers that you're trying to build a product for, that what are those unique insights that you're going to use to actually build a product that's truly amazing?
Got it. All right.
Yeah, I think there was a question from one of the founders that when will I get to know Surge 5 application results? I have applied on 7th of October. Look, if you haven't heard back yet, can you please message again on the chat window? Ali, let's take this. I'm surprised that we haven't gotten back to founders who
Sure.
applied 7th of October. We are now sitting, almost 2 months later.
Sure. Let me take a look. When you please send it in the chat, and we'll take a look.
Can you just put your name and the name of the company, please, on your chat on the chat window? We will get back to you on Monday.
Perfect. All right.
And Piyush, what's the name of the company?
Okay. Please type it in. Got it. Okay. Well, somebody from our team will reach out to you. We'll reach out to you with with what happens next.
Yeah. So Ali, let's make sure we get back to Piyush on Monday. Okay.
Okay. I think that the next question is from Alex Chandran. Alex is asking, what is Surge and Sequoia's view on handling of overlaps of portfolio companies? Meaning that when, let's say, a Surge company gets funded by Sequoia for Series A, what happens then?
Sorry, say that again, Ali.
When a company is funded by Surge and then is followed on by the Sequoia fund on Series A, what happens?
Yeah. So I mean, look, at the end of the day, two things here, right? One, once you're a part of Surge, you're a part of Surge for as long as you'd like to be a part of Surge, right? It's a community. What we have today is we have a community of 150 extraordinary founders who are going through this journey of building companies, right? And they share so much, and we are so active. Every cohort has a community, and then we have a broader Surge community. And once you're part of Surge, you can call us. In fact, yesterday I got a call from one of our Surge One founders. They wanted some help on a certain set of things, right? And we'll jump in and we'll help them out. So we're always there to help. Now, the second thing you should keep in mind is Surge is open architecture, right? In terms of Series A, it could be the Surge venture team, but most likely it'll actually be other investors, right? So if you look at our second cohort of Surge, we had 20 companies in our second cohort of Surge. We've already had 8 of them that have raised Series A. This cohort actually, completed Surge in January, right? So only 10 months ago, and 8 companies have already raised Series A. Only in one of those companies did Sequoia's venture team co-lead Series A. In all the other cases, other investors, in fact, our first company that raised Series A in our second cohort was Chili Belly. Lightspeed, which is a global tier 1 venture capital firm. Lightspeed actually led the Series A in Chili Belly, right? It's a social commerce, fresh social commerce startup based in Indonesia, right? So keep in mind that most companies will actually raise Series A, or that's been the data so far. But most of them will actually raise Series A from other investors, right? Now, then coming to the last question of what happens when Sequoia's venture team, let's say, raises Series A, then it's like any other Sequoia Series A investment. Sequoia will take a board seat. They'll work closely with you, and they will stay with you, for 5, 15 years, for as long as it takes to actually build the company, right? So that's sort of how it works. But I think it's very important to keep in mind that most companies that raise Series A actually raise Series A from other tier 1 investors. And I think that's why we have such a large number of our companies. Just to give you a sense, right? We had 17 companies in our first cohort of Surge. Our first cohort of Surge completed Surge in August of 2019. So Surge is only 18 months old, by the way, right? That's what sometimes folks forget, is that we're a startup, right? We've actually been around only for 18 months. Our first cohort of Surge started in March of 2019. They completed the Surge program in August of 2019. There were 17 companies. 12 of them have already raised Series A, right? So these are companies like Kata Book, Scalar Academy, Doubtnut, and in Southeast Asia, companies like Zenium, Kuala in Indonesia, Telio in Vietnam, and so on. Our first company in Bangladesh, right?
Yeah.
ShopUp, which just raised a $21 million Series A, was actually in our first cohort of Surge. And that's a great example, by the way. ShopUp raised a $21 million Series A. It was not led by Sequoia's venture team, right? Which is quite remarkable.
Perfect. I think Sanket wanted to ask, how does Surge team help companies connect with professional hiring needs that they want to make?
Yeah, that's a great question, Sanket. So hiring is an area where we provide a lot of support to our companies, right? And what we do is we have our own. Sequoia has several leaders who actually focus. We have a team called Portfolio Services, And within portfolio services, we have finance, we have marketing, we have talent, we have tech. So in our talent portfolio services team, we have three, very, very strong leaders, and they actually spend all their time working with our portfolio companies on hiring talent into their companies. And what we've done is those sets of leaders have also identified, and we work very, very closely with a set of search firms, right? So what we usually do with our search companies is we work with you to identify, hey, look, you need to hire these five critical roles or these seven critical roles. And then we actually, our talent leader within Sequoia will work with you to help you find the right search firm. And then we will help make sure that that search firm and us help you get to the right talent that you need. I'll give you a very interesting example. Telio, Telio, was in our first cohort of Surge. I don't know whether we have any Vietnamese founders. If we do, you'll know. I mean, they've now, actually their Series A was $25 million Series A. This is in the first cohort, right? While they were in Surge, they hired their CTO and they hired their first 30 engineers while they were in Surge. So this is a very, very important area where at Surge, we try to work very closely with our startups to help them because hiring is such an important part of a seed stage company's evolution.
Great. Thank you so much for answering that. Somebody is asking, does Surge, historically, what has been the success rate of a solo non-technical founder? And what is the growth of such founders post-Surge?
Solo non-technical founders, I'm trying to think. So look, firstly, I mean, we invest in technology and technology enabled companies, right? So for instance, if the startup that you're building has nothing to do with digital technologies, right? There's very little software in it. Sequoia and Surge will not invest, right? For instance, but that being said, let's say you're building a direct to consumer brand, right? And you come with a very deep background in, I'm just going to pick it, cosmetics, personal care, right? We're very excited about personal care. Mm-hmm. And you're not a developer, right? And you haven't built code, you haven't shipped code. So you'll need to actually find a co-founder, or you'll need to hire a CTO who's going to build that. That's okay. So in fact, if you look at Davnil, who's the founder of Skillmatics, and Payal can correct me if I'm wrong, he doesn't come from an engineering background. He may have studied sort of engineering, but he worked in consulting for a while, and then he launched this company called Skillmatics, which is in the educational toy space. And that company is just absolutely on fire. Now, what he was very good at is hiring and building an engineering team, right? So you have to still actually hire and build an engineering team if you're going to build, in that case, a technology-enabled company, right? Skillmatics is basically a direct-to-consumer toy brand, but he needs technology because he sells online, right? So that's an example of a company where it's not actually. In fact, Nelly, who's the founder of Tiger Hall, who's building this extraordinary company called Tiger Hall. If you haven't, you should check it out. It's really, really cool. I think you'll enjoy it. It's a new way of doing learning and development for companies. Nelly is actually not a tech founder. Nelly is she comes with very deep domain expertise in HR, right? And then she built this company. But again, right, she hired a team that was able to build out she had a vision of the product that she wanted to build. She had a vision of what problem she was trying to solve for and for whom she was solving the problem. But then she went out and built a team. So we are okay with that. But again, right, we want to see, but remember, founder market fit, right? In Nelly's case, she understood the problem so deeply because she had been in the HR space for a very long period of time, and she was able to articulate it. In that case, she had launched and she had some early traction in the company, which showed us that, yes, this was a product that had a lot of user love.
Great. I think.
And I had a question. So of the founders who are here, what percentage of them were pre-launch versus had launched?
I think about 38 to 40% were launched.
Already launched. Okay, got it.
Yeah, and then I think one of the last few questions we're gonna have, I think, is like, can you share an example of what a differentiated user consumer insights that you bring?
Yeah, no, I think it's Alok, what business are you in? Alok, tell me what business you're in. EdTech. Okay, let's take EdTech. Okay, so let's say you're in an EdTech company. Okay, I'm just going to pick an example. So for those of you that are not in EdTech, just bear with me. Hopefully you'll get this. So let's say you're building an EdTech company. You are focusing on tier 2, tier 3 India. You're focusing on households that make less than 5 lakhs a month, 5 lakhs a year of household income. You're focusing on English language. You're focusing on English language for that segment. Okay. And let's say you built your product and you've got, let's pick a number. Let's say you've got month two attrition of 15%. Firstly, we want to know, do you think that's a good number or not, right? Because that'll tell us, give us some sense of, okay, is this funder really clued in? Second, I want to know, why are the people who are, what is the specific profile of those users that are using the product? What is the magic moment? Hopefully you guys know what magic moment is. Otherwise, please go do the research on magic moment. What is the magic moment that lets the power users of that product to become a power user of the product? I'm trying to understand, what insights do you have, or why do people churn? Why are they churning, and what can you do about it, right? So that's those are the kinds of things, right? What do you know about your user? Like, for instance, one of the things we see with early stage companies is they want to build for everyone. They want to, like, you're building a B2B company, you want to sell to large companies, you want to mid-sized companies, you want to sell to small business. That's not good. That's not very insightful. That's not very targeted. That's not a great recipe for success, right? Let's say you're building for small businesses, right? You've got an SMB SaaS product. We're doing a lot of investments now in SMB SaaS, but we're trying to understand exactly who's the user that you're building for. What is the problem that you're trying to solve? How do they do it today? And why is it that this approach that you're taking is likely to be a much better way to solve that particular user need, right? So those are the kinds of things that we're looking for. Ask yourself this question, right? What is the unique insight that you have about the specific problem that you're trying to solve that gives you an unfair advantage to serve that need? Very straightforward question, right? You'd be surprised how few founders can actually answer that question.
Got it.
Look, just because edtech is hot, you shouldn't be building an edtech company. Everybody's trying to build an edtech company because edtech is hot. Well, that's not a great reason to build edtech. Keep in mind, Byju's was filling up stadiums with students who wanted to learn from him math for many years before he launched the Byju's app. Right? There was a reason. This was a master educator, very deep domain on math, and really an incredible passion, to educate as an educator, right? And then he he had built this sort of offline business, and then he said, okay, let me go, build a digital business. And that's when, GV, who's one of our partners at Sequoia, actually invested in Byju's and has been on his board since, right? So you've got to ask these sorts of questions, right? Because what we find is, too often than not, a founder is trying to do something because, everybody else is trying to do it, or it's a hot sector, or they think they can get funding. Those are all really bad reasons to be building a startup.
Yep. Rajan, somebody wants to know if the Surge term sheet, share of the founders, is going to be available for reading at any time.
Look, you should just, well, firstly, you can go online, you can find term sheets, right? There are lots of sites where you can get term sheets. What I can tell you is it's really simple. We haven't published our term sheet public. Maybe we should do that at some point, but it is really, really simple. In fact, if you're really interested, maybe you can let Ali know, send Ali just private message Ali, and Ali, we can't send you the term sheet, but we can send you the terms that are in the term sheet.
Yeah, we can just black out certain terms, etc.
Yeah. We should send it to you. So if you're really, really keen, why don't you DM Ali on Instagram or Twitter? She's super active, and she can send you. No, just send the terms, right? Just the terms. You don't need to send a term sheet. Just the terms that we have in our term sheet, and that'll give you a sense of what it is.
Sure. Happy to do so. All right. Let me see. I think somebody is asking, is like, hey, there's an investor joining in who wants to know, is there an opportunity to co-invest in Surge cohort companies?
Yeah, of course. Look, as I mentioned, 80% of our companies in Surge have co-investors, right? So when they come into Surge, right? So we are co-investors with tier one firms, Axel, Lightspeed. We are co-investors with sort of the larger, the seed funds that have now graduated to being mainstream funds, like, let's say, Bloom, BNext. We partner with lots of sort of early stage funds. We have many of our companies have angel investors who invest in them in their rounds. So absolutely, right? So for instance, Whiteboard Capital, We've invested in several of their companies. Leo Capital, we've invested in several of their companies. So we are open architecture, right? So if there are companies that you think are that Surge should look at, where you're going to invest and you'd like us to invest in, we'd love to look at that. There are firms that we tend to invest with a lot because they just partner with us closely, and with those firms, we do a lot. But where we are truly open architecture, I mean, we get a lot of companies that get referred to us by other investors, angels, seed funds, venture capital funds. We co-invest. We are truly an open architecture model. We like doing that. That is our model.
Got it. Got it. Great. Uh, Great. All right. I think somebody wanted to know about another sector, which is IoT and hardware sector. Is that with some element of SaaS in it? Is that something that Surge would be interested to look at?
Yeah, I mean, look, yes. I mean, I'll tell you an example of a short answer is yes, right? Look at it. But look, if you're building hardware that's going to take 4 years or 5 years of development cycle times, probably not, right? We might still look at it from a Sequoia standpoint, but not in Surge, because it's going to take you 3-4 years to actually develop, do R&D, and actually launch a product. And our program is 5 months, right? So you won't learn as much from Surge, and that's the only reason we won't look at it. But look, if you're an IoT company, and look again, right? We come back to, is there a great founder market fit? Is this a business where you can build a large business? Like for instance, if you're building an IoT company focused on B2B, we'll ask this question, okay, how long does it take? Can you get to a $100 million revenue company? Yes or no? How long does it take to get there? When you get there, are you going to have 60-70% gross margin? Yes or no? Right? Those are the kind of questions we would ask. But absolutely, we'd love to see more IoT companies. The challenge we've seen, at least in Indian IoT companies, just so that all of you know, is very few of them being able to scale. Right? So the thing that we're trying to understand is there a reason why this particular IoT company, this IoT application in this vertical solving this problem is going to scale very fast?
Great. Perfect. All right. So somebody wanted to ask about the future of prop tech, specifically post COVID-19. Is that a sector that we would be interested to look at?
Yeah, I mean, look, we haven't done any prop tech companies per se. We had one construction tech company, which was called Brick and Bolt. It was in our second cohort of Surge. So what they do is a Bangalore-based company where it was more construction tech. It wasn't really prop tech the way you're thinking about it. It was more, if you want to do a construction, you can go to them. They will take end-to-end responsibility. They'll deliver it on time, on budget, kind of thing. But we do think, look, if you're building interesting things in real estate tech, in prop tech, obviously the timing right now is a bit challenging, but I think over the next 6, 9, 12 months, world's going to get back to normal, and people are going to go back to lots and lots of construction, and real estate will back to being booming. So we'd love to hear from you. We'd love to take a look at it. Look, at the end of the day, look, it's less about the sector per se. Obviously, there has to be a very strong technology or technology-enabled component to your business, because at Sequoia, we are technology investors. But by the way, it could be a fintech, it could be edtech, it could be digital health, it could be agri-health. But what we're really trying to figure out is, are you solving a problem in a space that is large enough that could lead to building a very large company, right? That is what we're really trying to figure out. Real estate, massive. It's $1 trillion industry globally, right? Now, the question is, what exactly are you solving? And are you solving in a very unique way that could actually help you build a very large company?
Great. All right. Next question. Rajan from Virendra. He's asking hey, taking a look at the recent Surge 04 cohort, almost all 17 companies have decent to great traction. Does that mean that Surge gives preference to companies having traction and good revenues before applying over those who are still at ideation stage?
Yeah, no, actually, I'm not sure where you're getting that from. We do have some companies that have a lot of traction, right? But as I mentioned, look, 6 of the companies, firstly, keep in mind, right? We have 17 companies in our current cohort. 3 of them are in stealth. Usually stealth means it's really early. Okay, so that's 3 of them. Then remember that I mentioned there are 6 companies in this current cohort. When we invested in them or partnered with them for Surge, they were pre-launch. So by definition, there's at least another 3 companies that are very, very early, right? And of the remaining, so let's say there are remaining 11 companies, there are probably another 3 or 4 that are super, super early. So if half the cohort has launched and has some traction, the other cohort is super, super early, right? So that's what I said. It is never too early to apply to Surge. But if you are applying pre-launch, you better be an extraordinary team with extraordinary product market fit. And you should have super deep insights about the problem you're trying to solve and how you're going to solve it and how it's so unique, right? So, and in a large market. So those two things become very, very important, because what happens is once you launch and you start showing some traction, you can also look at the metrics, right? Sometimes we look at some early metrics and say, wow, that is amazing retention. That really shows customer love that we haven't, it's like, blow your mind, retention numbers, right? And so then we can say, okay, yeah, we're not quite sure exactly how big this market is, but man, there is incredible customer love, there's extraordinary retention, and this is a company we should really look at very seriously, right? So that's the benefit you get of having launched, is we just have more data to look at, right? And when we can look at more data, we can very quickly figure out, is this a company that seems to be showing very early signs of early signs of product market fit, or early signs of customer love.
Great. I think another person is asking, is there a rule or some kind of like framework that like Surge applies to in terms of determining how much equity Surge wants out of a company?
No, so as I said, right, we invest $1 to $2 million, and we take between 10 and in the early 20 percentage point, 20 some percent, but between 10 and 20 some percent. That's so $1 to $2 million from Surge, right? So we won't invest less than $1 million. We won't invest more than $2 million upfront. We do some stuff, after Surge, but when you come in, that's $1 to $2 million, and for that equity stake, I would say, at the bottom end of the range is 10%. At the top end of the range, it can be 20 or slightly above 20.
I see. All right. And I think like one of the last questions, because we are gonna wrap up soon, is how much of entrepreneurial autonomy remains available to founders after they sign up for external funding with Surge?
You have 100% entrepreneurial autonomy. Keep in mind, you are the entrepreneur, right? You are the founder. This is your company. You're going to build this company, right? We are here as partners, right? We will invest in your company. We will actually give you, hopefully, what is a really, really awesome learning experience over 15 weeks on what it takes to build a really great company. We will help you on the 2 or 3 areas that you think are going to be really, really important to, build and scale your company. But other than that, it is entirely up to you, right? So you have 100% entrepreneurial autonomy. Keep in mind, we don't take a board seat. We're not going to tell you what to do every single day. At the end of the day, look, great founders build great companies, right? We can only be enablers. We can be catalyzers. We can help you maybe avoid making the mistakes that others have made you before this. Keep in mind, Sequoia has a 48 years of investing history, right? Investing in companies, iconic companies like Google and Apple and Cisco and WhatsApp, and in India, companies like Baiju and Zomato, Ola, Freshworks, and Gojek, and Tokopedia in Southeast Asia. So we are just going to, we have from that experience, we are able to guide you. But at the end of the day, look, you are the masters of your own destiny, and we don't try to really get in the way. And there's a question here about can I have a recorded version of the webinar?
On YouTube.
Everything's online.
It's on YouTube, guys. It's on YouTube. Go to youtube.com. Go to Sequoia India's channel. You'll be able to find all of our previous Surge Decoded, all our previous webinars. That we've done previously. I think only a few of them are just not available online yet, and that's because we're doing some couple of things with it for now. But most of it is available on YouTube. So just go on our YouTube channel, guys. I think the last question is like, hey, what are the factors to consider while evaluating a pre-launch startup? What worked for Let's Dive, and what worked for Kite? What worked for Dive and what worked for Kite?
Yeah, I mean, let's look. I just talked about pre-launch companies, right? Extraordinary founders who know exactly what problem they want to solve, and large markets. So if you look at Let's Dive basically is a SaaS platform that makes remote work fun. The 2 co-founders there actually are serial entrepreneurs. They have built and sold their last company. They've actually been focused on the remote workspace for the last 7 years. Their last company was basically remote. I mean, they had this whole company that they built without ever having an office, right? So they understood the challenges of remote work. So that's number one. Second, the prototype of the product that they had built was super interesting, right? I mean, we looked at it and said, oh, wow, this is like amazing product, right? We would want to use it. By the way, that's an interesting thing, right? If your users say, we would love to use it, that's a great sign. Because keep in mind, we're all also, right? I mean, the Surge team, Sequoia team, all of you, we're all working remotely right now. So one was that was the founder. So they understood the problem very, very deeply. They had built before. There was a very clear need, right? Remote work is hard. Remote work is not fun. They want to make remote work fun. So that's the team. And then the market is large, right? Because every company is going to have significant work from home, work from anywhere going forward. And team engagement is a huge priority for every manager, every leader, every CEO, every division manager, every head of engineering, every head of product. So we can see that this is a product that is going to be liked by lots of folks. So let's dive. And Kite is sort of a similar story. We really backed a team that this is a team that had sort of built very large businesses. And by the way, Kite is an interesting example of a company that was not doing this. They actually made a very, very significant pivot into Kite, into sort of the current business model of Kite during COVID, because the original business that they wanted to build, because of COVID, that was not really a possibility. So as I said, look, at the end of the day, we are betting on founders, right? We are really trying to understand, is this team very special? Why do they have a unique right to win in this market? And then we are trying to understand, how big can this market be?
Great. All right. So, with that, that brings us to the end of this edition of Surge Decoded and the last one for 2020. Thank you so much for taking time with us. Really appreciate it. Whether you're on YouTube, whether you're on Zoom, wherever you are, or you're watching this, post that in like a couple of days or a couple of weeks or a couple of months later. Really enjoyed, spending the time with you guys. How about you, Rajan?
Right. Great, thank you. Well, firstly, Ali, thanks again, and also to the entire Surge and Sequoia team for putting this together. Founders, thank you for joining us. I hope this was useful. Again, look, we've got lots of recorded content on the YouTube channel. As Ali was saying, please do go take a look at it. Probably have answers to every single question that you have about Surge. Most importantly, thank you for what you're doing. I think being a founder is the hardest job in the world. We know how hard it is to build a company. We are delighted that you're trying to build your company. If you're interested in Surge, please do apply, because we'd love to hear from you. And even if we don't end up working with you, we're rooting for you. Please keep that in mind. And as Ali said, this is the last session we're going to have before the holidays. We've still got many weeks to go before the holidays, but keep building. And if you are going to plan on taking vacation, have a great vacation. We'll see you guys in the new year.